Melton versus Bendigo. I've seen a few people ask this in the comments section. Why would I invest in Bendigo when I could buy in Melton for a similar price? That is exactly the question we're going to be unpacking today with data analyst Gilbert Melgar, property investor and founder of Suburbs Finder.
We're going to compare apples versus apples. Same type of property, same block size. Population-wise, 206,000 for almost half, 124K.
Unpacking all the data and analytics between each area to give you a clearer picture. As a property investor, should you be looking more into Melton or Bendigo?
Looking at the cash flow, so this is after tax. When you're buying, you need to run the numbers. You're stress testing the property's financial situation. I'm going to choose between the two. I'd go to...
If you've been thinking about investing in Melton or Bendigo, you are very much going to enjoy this episode. My name's Todd Sloan. This is the Pizza and Property Podcast, and this episode is powered by Property Strats, Full Circle Finance, Suburbs Finder, and InvestorKit. More about our awesome show sponsors in the show notes below. Right now, let's jump into the episode with Gilbert Melgar. Gilbert Melgar, how are you, man?
Good, mate. Good. Good to be here again.
Mate, it's been a little while and we're going to be unpacking a subject. Well, I say we, more you have put in a ton of work on this one. Melton versus Bendigo. There's a lot of people that have been wondering this. If you're looking at similar kind of entry prices, similar kinds of yields, but a very different kind of proximity to Melbourne CBD, which is the way to go and what are the pros and cons? So this is going to be a versus episode that I think was literally requested in the comments section as well. But mate, is there anything you wanted to set the stage with before we start jumping into all the data and everything you've prepared?
Well, first of all, thanks for having me again here.
Pleasure.
Always enjoy being here. And next would be, what we're going to do is we're going to compare apples versus apples, right? So same property, same type of property, same block size, so that at least we can have a better idea in terms of numbers that we're getting.
Got it. Okay, so you've prepared two different properties that we can look at as a bit of a side-by-side. We're going to be diving into the cash flow of those. But before we do you have a little bit more of an overview as far as the economy on both Melton and Bendigo?
Yeah, definitely. So Melton has, in terms of gross regional products, so it's almost 8 billion, so that's 7.9 billion. With unemployment rate of 5.1.
Got it. Unemployment rate 5.1. And how do you want to do this? We're going through everything from Melton first and then we'll go through Bendigo? Or do you want to do them like kind of side by side?
Yeah, we can do side by side.
Side by side. All right. What are we looking at for GRP for Bendigo?
It's 10.5 billion.
Right. So it's bigger.
Bigger, yep.
Population-wise, that'd be a pretty big difference too, wouldn't it?
Yeah, population-wise, for the LGA for Melton is 206,000 people.
Gotcha.
And for Bendigo, almost half, 124K.
So a very big difference.
Yeah. So that's the reason why the per capita for Melton, since there are more people within that LGA, is 44 grand.
Got it. Okay. So when you actually start breaking it down into the population, it's a bit of a different number.
Yep, exactly. While for Bendigo, it's 86 grand because there are less people living in Bendigo.
And so as far as the positive out of that's concerned, to me, that's very much leaning towards Bendigo already, correct?
Yep, correct. And I talked about the unemployment rate. The unemployment rate for Melton is 5.1. For Bendigo, it's 3.7.
Yeah, right. Okay.
And the interesting thing is the top two employment industry is retail and construction for Melton. And for Bendigo, it's healthcare and social assistance.
All right, so healthcare is one of the major employment industries for Bendigo, but then we're looking at more like retail construction for Melton. Now, again, we're still talking very big picture. What if we zoom in a little bit more and start comparing some suburbs? What have you got prepared, Gilbert?
On a suburb level, Bendigo versus Melton, we're going to talk about first crime score, right? So crime score for Bendigo is 68, while for Melton, it's 39. So anything above 50, actually, it means crime most of the time happens and may inconvenience people or they get affected with their daily lives.
Okay, so if it's like a quarter of that and it's more around 25, what does that typically mean?
Typically means crime happens, but may not always affect the lifestyle of the people in there.
Right, so that's more so like kids shoplifting, something like that?
Yep.
It's not good, but it's like...
Theft, jaywalking or anything.
Yeah. Gotcha. Okay, and if it's like 80, 90, like it's up there, that's like this is a tricky place to live.
Yes, exactly.
Gotcha. Okay. So Bendigo is higher than Melton. So it's like golf, essentially. The lower the score, the better.
Better.
Yeah. Okay. And so 39. So for Melton, bigger picture, we're looking pretty good. Bendigo, not terrible, but not great.
Yep. And it's just one metric. So that's what we call the lifestyle metric, right?
Got it.
But in terms of investment metric-wise, stock on market percentage for Bendigo, we're looking at 2.6.
2.6 for stock, yeah.
For Melton, that's 1.16.
Yeah.
So that's 1 point
It's almost like 1.5
and a half lower.
Yeah.
Yep.
All right, so Melton as a suburb, Bendigo as a suburb, we're looking at a 39 crime score, Melton, 68 crime score, Bendigo. As far as stock's concerned, 2.6 for Bendigo and 1.16 for Melton. So Melton's a little bit more tightly held.
Yep. And in terms of days on market, so that sales days on market for Bendigo, it's 56.
Yeah.
And for Melton, it's 40. So properties get sold quicker in Melton so far.
All right. So far, everything's kind of looking pretty decent for Melton at the moment. Do things start changing as we start unpacking it on a property level, or is this pretty consistent?
It is pretty consistent, but we'll see the numbers.
Is there anything else you wanted to unpack on a suburb level before we start getting into the comparisons of the two properties?
We can just dive straight in.
Awesome. All right. Talk me through property one in Melton. And just in case if you're listening on iTunes or Spotify, head on over to our YouTube channel because this will still make perfect sense to you, but it's just brought to life with a few more pictures that Gilbert's actually walking through right now. So what have we got in Melton at the moment, mate?
So what we're doing is we're comparing two properties, different areas, Melton and Bendigo.
Got it.
Right? 3 bedroom, 1 bath, and within the 550 to 600 square meter land.
So very much apples and apples.
Yes.
Yeah.
Exactly.
Okay.
So the first one we have is 9 Swan Street in Melton, Victoria. So that's a 3 bed, 1 bath, 2 garage, 579 square meters. And
this one's already sold, or this is on the market at the time?
It's on the market. Yep.
Gotcha.
So price guide is between 390 to 420.
Yep.
So we're trying to compare those properties that are within the 400 to 500 mark.
Gotcha. Knowing the way that they price stuff, especially if this is going to auction, can we open up the photos and have a look?
Yep.
I'd be very surprised so far if this goes in the high threes. It's going to be more like a low to mid fours job every day of the week.
You know, you're a real estate agent.
Well, was, yeah. But, I wasn't an agent in Melton, but I'm familiar enough with the area to know that if you could snatch that for $390, yeah, you would be very happy. That's provided this comes out on top and Melton is the area that you're actually looking for. But so give us a little bit of commentary around this property, Gilbert.
Well, this property is already, you don't have to do anything for this. So we can basically rent it out straight away.
It's not beautiful, but it's not falling apart. It'll do the job. You could rent it out by the look of things.
Yep. Plus, you can improve along the way.
Exactly.
There's an opportunity to
add some value.
Yep. Next is we're going to Bendigo. So same. So this is a 3 bed, 1 bath, 2 garage.
Got it.
And it's on 533 square meters.
Looks good from the front pic.
Yep. Let's have a look.
What are they asking?
And the price guide is 480 to 520. Address is 186 King Street in Bendigo. So this is nothing to do as well. So you can easily rent it out straight. But of course, there's always an opportunity to add value.
And obviously the only caveat to this is everything meeting Vic minimum rental standards as well, which sometimes they can be a little bit trickier to meet. So there might be a few modifications that need to be done, but on face value, I see what you mean. This looks like it's pretty much ready to go.
Yep, that's correct. Plus, both are in a good location.
All right, why don't we start diving into the numbers? So as far as the property is concerned, Bendigo's got a little bit of a higher buy-in price. Melton's got a little bit of a softer buy-in price. Again, if you could get it for around the advertised figures that we're talking. But cash flow-wise, now you've put some numbers together. Do you want to walk us through how they actually look from a cash flow perspective?
So what I did here is I plug in all the numbers, right? So for Bendigo, the price guide is 480 to 520. So to be more conservative, I use the 520 as the price.
So using high end on both?
Exactly.
Yep.
And then for the Melton one, it's 380 to 420. So I use the 420.
Gotcha.
So for that, and then both we assume that it's on a 30-year loan at 6.7% interest rate.
Sounds about right.
Interest only for 5 years.
Okay.
And I've also put it here, the taxable income. So for joint or a couple, taxable income, as an example, is 110 for each, and 50-50 ownership. The reason why we're doing this is so that we can compute the after-tax cash flow,
Gotcha.
not just the gross or before tax,
Yep.
but the after-tax cash flow. The reason why is we're using the ATO's tax table behind this.
Love it.
So we're not only making an assumption that your tax is on a certain percentage.
Right. So some of these numbers are going to be different depending on basically how much someone earns.
Exactly.
Got it.
Exactly.
Okay.
So also based on a 20% deposit we have. So looking at the...
And that's 20% cash deposit or 20% equity?
20% cash deposit.
Cash deposit. Cool. Just want to clarify. Got it.
So looking at the cash flow, so this is after tax. So we're looking at, on the left side, this is Bendigo. So the rent that we put in here is $470.
Okay. So what's it, like a 4.7% yield, something like
That
that?
is 4.62.
4.6. Yep.
Because I actually called the agent and asked how much it would rent.
Gotcha. Okay.
And it's 470 would be the lowest. So I'm just trying to be conservative here, using the lowest.
Yep.
Right.
You're not shooting for the stars.
No, definitely. 470, so that's 4.62. And based on the taxable income using ATO's tax table, it will be positive on 2035 after tax.
Okay,
so it's going to be positive 893.
And so that's provided interest rates stay exactly the same for the next 10 years.
Exactly. And provided that after 5 years, they refinance again to get into interest only.
Got it. So realistically, interest rates are looking like they're going to come down. Like we're recording this around February 2025 now. It's like it is looking like that's where it's going. No one knows for certain, but that could become positively geared a lot quicker if we get a few reductions.
Yep.
But then in the opposite, if they didn't go or they went up, then obviously that's going to change things in the opposite direction. So as it stands, 2035, it would become positively geared.
Yep. Which is the reason why it's essential that when you're buying, you need to run the numbers. That's so that you're stress testing the property's financial situation.
Gotcha. How are we looking for Melton then?
So for Melton, it's the same. It's going to be positively geared after tax on 2035, but it will be 587 positive.
Gotcha. And that's
compared to Bendigo's 893. So it's just around $400 difference.
10 years to positive on both. I got to say, man, like the cash flow side of me isn't pumped about that. And this is why Melbourne is a very delicate balance, in my opinion, at the moment. But what if, just because you got everything open, let's say I ran through and did a quick cosmetic reno, right? Spent about like 40 grand, but we upped the rent by more like sort of, I don't know, $70 a week. Nothing crazy, but still a decent rental increase. How long until we're positive? How many years are we shaved off?
So we're going to add $70 on the rent. So that from 400, that becomes 470.
Okay. So we're pushing it, but possible.
But how much are we spending on the reno?
Well, let's say it's about 40 grand.
So 40 grand. Then we need to add that to, let's say.
Let's say we're using equity.
Yep. So let's say we're using equity. So we're topping in. So instead of 420, so that would be 460.
Yep.
Right? So just an example, we'll change it to 460 now and we'll see. Looks like it has improved. So now it's telling me that it's going to be positive on 2033.
It shaves a few years off.
2 years off.
How much is it negative the year before? Because that looks like a blip. Like the year, couple of years before, the early 2030s. Is it negative by what? Like a few $1,000s a year or?
Yep. So in the first year, it's negative 5,800.
Yep.
And then the next would be 5,200 plus. Next is 4,500, 3,800, 3,000, negative 2,000, and then negative 1,000.
Gotcha.
And then it becomes positive 155.
Then it flips.
Yep.
And whether we're talking Melton versus Bendigo or really just Victoria in general, it has lower yields. There's a few more things to balance. If you want to build a portfolio using stock in Victoria, sometimes you do have to add a little bit of a creative strategy, whether that's like a granny flat or SSD, as they call them in Victoria, whether that's renovating, developing, rooming houses, as I know that you're very good at. There's a lot of different things that you could do potentially to increase that cash flow. So you're not potentially waiting 7 to 10 years before you're actually getting into a positive state.
Yes, definitely. Plus, you got to weigh in, is this property fits within my portfolio?
Exactly. Love it. All right, man. So as far as cash flow is concerned, they both look pretty similar. There's not a huge difference here. Is there a standout that you wanted to kind of point to before we move into the last part?
Standout would be, I'd say, if I'm going to choose between the two,
Yeah.
right, I would go to a less risk. That being said, I'd go to Bendigo because right now there are a lot of stocks, new dwellings coming in within the Melton area.
So as far as like the greenfield side of things, you're looking at Melton and going, as much as right now it's a little bit more tightly held, you feel fast forwarding, there's going to be a lot more stock introduced to the market.
There's already a lot of stock in the market.
Got it. All right. So you're looking at Bendigo as probably a better longer term play then. So as far as Bendigo versus Melton,
Yep.
it looks like it's probably not a clear-cut choice, but we're looking into the details you prepared. It's Bendigo for you, is that right?
Yes, definitely. Plus, as you mentioned a while ago, one of my strategies is rooming house.
Yeah.
So there are less rooming houses in Bendigo.
Got it. So less competition.
Yep.
So all in all, Bendigo versus Melton, as far as the economics are concerned, it's looking like there's a few pros and cons for both. Bendigo's got a far stronger economy, and especially when you break it down to per capita. Crime score, not quite as impressive. Looks like Melton might be a slightly quieter place to live, if we put it that way. But as far as its longevity is concerned, you're really leaning towards Bendigo being the potential pick out of the two because of less supply being introduced into the market. There's a hell of a lot more construction. I mean, as you said, one of the highest employers in Melton is the retail and construction sector. So it's no surprise when there's going to be a lot more houses potentially jumping onto the market.
Exactly. And of course, this is definitely going to be different for each individual financial situation and strategy and where they are in their investment journey. Right? As I've said, for me, personally, the reason why I picked Bendigo is not because it's better compared to Melton and not because Melton is better compared to Bendigo, but it just simply fits my strategy.
Makes perfect sense. Well, Gilbert Melgar from Suburbs Finder, it is always a pleasure having you on the show, mate. I'm sure we'll be doing another one of these Versus episodes soon.
Thank you. Thank you for having me here. And yeah, see you guys soon.